The Finance Ministry has just announced that the previous 34% tariffs on all U.S. goods entering China have now been raised to 84%. President Trump is now promising a new 50% tariff on China, in addition to other new tariffs, which themselves are on top of existing tariffs. Altogether, this would bring the total U.S. tariffs on Chinese imports to 104%. That includes a 104% tariff on China, which, in response, raised its tariffs on U.S. goods to 84%, up from the previous 34%. Returning to our breaking news, China has announced 84% tariffs on American goods entering the country. President Trump is reportedly in panic mode, but this situation is different from past ones. On April 9th, President Trump suspended most tariffs imposed on U.S. trading partners for 90 days. This move did not come as a surprise, and U.S. stock markets responded positively. However, this reaction was short-lived, as Trump appeared to overlook an important issue: China. Rather than benefiting from the delay, China is now facing an increase in tariffs from 104% to 125%. In response, China swiftly raised its tariffs on the U.S. to 84%. But China's actions may not stop there. Reports indicate that the Chinese government may now play its final strategic option, one that could deeply affect U.S. stock markets. According to the latest information, China is considering selling its large holdings of U.S. Treasury bonds in response to the aggressive U.S. tariff policy. The world's two largest economies are once again at a critical juncture. Amid rising trade tensions between the U.S. and China, Beijing is reportedly evaluating the option of selling its U.S. Treasury holdings, which are valued between $900 billion and $1.1 trillion. This has been referred to as a trade atomic bomb and has caused concern in Washington, particularly for the Trump administration. So, what does this move mean? Why is China discussing bond sales now? And why are U.S. stock markets reacting so sharply? Let's examine this situation, as it may impact not only the two nations, but the global financial system as well. We will look at expert insights, detailed analysis, and the potential consequences. Initially, the idea of China selling U.S. bonds seemed unlikely, but the trade war reignited on April 2, 2025 has changed expectations. Documents shared on social media suggest China has instructed its central bank and financial institutions to reduce their purchases of dollars. Parallel news reports state that China has already started to reduce its holdings of U.S. Treasury bonds. This indicates that Beijing is preparing to use its strongest economic measure in response to the Trump administration's tariff pressure. Some experts argue that if China sells a substantial amount of bonds, it could lead to higher U.S. borrowing costs, a weaker dollar, rising inflation, and a significant shock to the domestic market. This scenario aligns with the economic atomic bomb analogy circulating on social media. Excessive bond sales could trigger market panic. China is one of the largest holders of U.S. debt. For years, it has invested a portion of its trade surplus in U.S. bonds, helping finance the U.S. current account deficit and preserving its own reserves. However, Trump's tariffs, reaching up to 104%, appear to have prompted Beijing to consider using its financial leverage. There are rumors in international media that Chinese banks have been ordered to stop buying dollars, suggesting a gradual shift away from dollar-based assets. The current bond market sell-off supports this. British media reports show that the sell-off in U.S. Treasury bonds is intensifying, pushing up yields and causing disruption on Wall Street. As a result, Trump's tariff strategy seems to be evolving into a financial panic centered on the U.S. bond market. According to social media analyses, the idea of China selling bonds has been discussed for years, but Beijing had previously avoided this move. This is because selling large volumes of U.S. bonds could hurt the value of China's own reserves. Furthermore, the strong economic ties between the U.S. and China mean that such a move could harm both sides. Still, as fall 2025 approaches, tensions surrounding the Trump administration's tariff policy continue to rise. It seems to have reached a different stage. According to reports, China has also announced that it will impose an additional 84% tariff on U.S. goods. This indicates that trade ties between the two sides are in the process of being severely damaged. Although Trump has said they want to make a deal, but they don't know where to start. So I'm waiting for a call from them. Beijing is demanding that the tariffs be lowered first. It is a situation where neither side is giving the other any room to breathe. In this standoff, the possibility that China may strike the U.S. on the financial front by selling bonds is being taken more seriously. The question is, would China really play this trump card? Some observers say that a large-scale bond sale would also harm Beijing, as it would devalue the remaining U.S. assets. Still, experts say that if a trade war of this magnitude continues and economic interdependence breaks down, China might accept some losses in order to pressure the U.S. financial market. The Trump administration has overused tariffs as a weapon, and now, according to some analysts, Beijing is playing its strongest card. China's actions may not stop there. Its order for banks to reduce dollar purchases could be part of a broader plan to limit the global use of the U.S. dollar. Beijing wants to diversify its reserves to protect against the risk of sanctions and is developing alternatives such as the digital yuan. This step may not be just a bluff, but rather a long-term strategy. Meanwhile, U.S. stock markets have already been shaken by rumors of a Treasury bond sale. Last week, investor sentiment worsened with the introduction of new tariffs, deepening the sell-off in the bond market. Many global funds that consider bonds a safe haven began panic selling, fearing that if China sells off its bonds, interest rates and inflation will rise, and bond values will fall. While this created another tremor in the stock market, it also put pressure on the dollar exchange rate. On one hand, Trump is saying, "We will win the trade war. We are determined on tariffs," while on the other, Washington says the door to negotiations with Beijing remains open. Experts warn that if China starts selling its bonds, the U.S. borrowing structure could take a serious hit. This might force the Trump administration to quickly make compromises. Still, neither side is signaling that they will back down anytime soon. Some say this bond sale is Beijing's last trump card, but China also has other tools for managing its reserves, including new steps in digital currency and conducting trade in local currencies within Asian markets. So while this may be Beijing's strongest move, it may not be its only one. Still, the prevailing sentiment in Washington is that such a move would send shockwaves through the U.S. economy. The Trump in panic mode narrative on social media reflects this major concern. In U.S. politics, some voices are saying, if China sells its bonds, interest rates will skyrocket and we will enter a recession. Some members of Congress have started warning the president, saying, continuing the tariff war may be shooting ourselves in the foot. Some experts question how effective a Chinese bond sale would actually be, since the total U.S. bond market is huge. It's estimated that China holds between $900 billion and $1 trillion in U.S. debt. A sudden sell-off could cause yields to spike in the short term and shake the dollar's value. But China would also be hurt, as the value of its remaining bonds would drop, and its dollar reserves would shrink. Economists say that China might instead signal the U.S. market by selling a limited amount. This wouldn't be an economic atomic bomb, but it would greatly escalate tensions. The Trump administration has threatened that if China goes that far, the U.S. will respond with financial sanctions. Still, scenarios like the sanctions imposed on Russia after the Ukraine war are a concern for Beijing. This seems to have encouraged a let's be prepared mindset, reduced dependence on U.S. bonds. In the long run, there may be a slowdown in dollar purchases and a shift toward alternative currencies. This would challenge U.S. dominance in the global financial system. The widespread view on social media is that if the trade war continues, global growth will slow, inflation will rise, and demand will fall. Some believe that China might end up as the only winner in Trump's tariff war. A U.S. bond market panic could shake investor confidence and open opportunities for other Asian markets. Even Trump's efforts to pause tariffs haven't reassured the markets. The bond-centered turmoil continues. Reuters sources have pointed to analyses titled, "Why is China buying U.S. debt with treasuries?" Beijing once regarded U.S. Treasury securities as the safest place to store its surplus from exports. However, as relations between the two countries worsened, that perception of safety began to fade. Now, people are asking, what would happen if China started selling U.S. bonds? In this context, the reactions of other countries that hold large amounts of U.S. bonds are also being closely watched. Japan and some European countries are concerned about whether they would be affected by disruptions in the bond market. If U.S. interest rates rise, global capital flows could shift. Investors may think, if the U.S. is becoming risky, let's move to other markets. As a result, this isn't just a U.S.-China issue. It's a global economic concern. The world is asking, Are we on the edge of a new crisis? Historically, trade disputes combined with financial instability have led to global recessions. Some recall the protectionist policies of the 1930s and the Great Depression that followed. While some argue that today's technological era is different, the situation is not being taken lightly. China has indicated interest in reaching a deal, but it's unclear how to begin. "We're waiting for their call," Trump said, perhaps a sign that negotiations are possible. On social media, people are wondering whether Trump is bluffing or genuinely committed to reducing the trade deficit. Beijing's message is, "Remove the tariff barriers and we will respond in kind." If no agreement is reached, China's final option, selling U.S. bonds, could come into play. The scale of such a move is crucial. Would China sell off all its reserves, or just a portion, perhaps billions of dollars daily? Either action could unsettle U.S. financial markets, weaken the dollar, raise interest rates, and increase the risk of a recession in the U.S. economy. Some analysts argue that such a move would harm China as well. As Trump's policies continue, Beijing may feel increasingly pressured. This leads to another question. Is the U.S. administration facing a trade atomic bomb? While the term may be an exaggeration, China becoming a major seller in the U.S. bond market would likely cause significant disruption. Many economists believe that as the trade conflict escalates, U.S. bonds have become a target. Headlines like "Dramatic sell-off panic deepens" from The Guardian reflect the market. Reaction: investors are pulling away from bonds, worried that continued tension could destabilize the U.S. economy. Rising yields make U.S. borrowing more expensive and add inflation risks. Social media users warn that this could lead to a major recession in 2026. If that happens, even Trump supporters may be affected. China, for its part, says it is acting in self-defense. It can spread out the risk by directing banks to lower their dollar holdings. At the same time, its tariffs, up to 84% on U.S. goods, show how strained trade relations have become. Some commentators suggest China could come out ahead, especially as U.S. agriculture, automotive, and tech exports may face big losses. But much of the Asian press views the situation as mutually damaging. Chinese exports will also take a hit. In the end, it's a lose-lose scenario. Financial centers around the world are urging calm. Stop the bond market turmoil, or we could face a crisis like 2008. Observers believe we're at a critical turning point. The trade conflict between the U.S. and China has spread into the financial sector and may erupt into a broader crisis at any moment. Some refer to this as Trump panic, as concerns grow that the White House might soon call for a compromise. Still, Trump continues to make firm statements. Many online comments suggest that the longer this confrontation continues, the more damage it could do to the global economy. The bond market had been hopeful during a recent rally, but collapsed when tariffs were imposed. The market had anticipated a pause or diplomatic solution, but when that didn't happen, a sharp sell-off followed. Reuters reported this, while Forbes emphasized the risks with the headline, "U.S. Rally at Risk, China May Be Selling Bonds." CNBC noted that China might even impact the U.S. housing market. Rising bond yields could increase mortgage rates and reduce housing demand. In other words, the ripple effects from the bond sell-off could continue to grow. All of this reinforces the view that if the trade war worsens, China's central bank may begin selling off U.S. bond holdings, an act that some are calling the trade atomic bomb. People are now asking, will Trump end this conflict? Others believe China is also reluctant to harm itself. Let me know if you'd like a shortened version or if you need this formatted for a specific purpose.